Hey guys, this is Chris again with the Hidden Reserve, and in today's presentation I'm going to be going over the hidden risk in your business. So this is mainly for business owners. So if you're not a business owner or you're thinking about, well, if you're not a business owner, this isn't for you, but if you are a business owner, you're thinking about becoming a business owner, watch this presentation here. So the hidden risk in your business, how to protect, preserve, and prepare for the loss of a key person. And we're going to dive into that a lot more in this presentation. So the first thing I want to go over is the hidden risk that most owners ignore. So if you're a business owner, have you ever asked yourself, like, what would happen if a key person inside of your company just suddenly die? And for a lot of you, that might be you. You might be self-employed, or you might have a few employees, but you're the main driver of your business. Do you have anything that's in place for if you die while operating your business? That's a really important question to ask yourself. So what could happen if a key person dies within the business? Lost revenue, lost client relationships. And a side note on that, a lot of businesses, the client relationships are, solely reliant or heavily reliant on one, maybe a handful of individuals. So losing that person that might have created those relationships, it might be you, like, what's that going to do to your business overall? Because a lot of times people like to work with people that, they've built that trust with, that they have that relationship with. So what would happen, if that key person that created those relationships passed away unexpectedly? So it's really important to be aware of that. The other thing is maybe there's missed projects or just a declining morale in your business. So maybe it's a project manager, someone handling the day-to-day operations or the projects that are going around in the company. What would happen if they pass away? Time and money to find a replacement. So this is often not looked at as much, but how much time would it take to replace your top salesperson, for example? And how much money would it cost to actually hire that top talent? Because maybe you have a really good salesperson and they're bringing in a lot of money to your company, or a good, really high percentage of the revenue to your company. They unexpectedly pass away. How long would it take to find another top salesperson? And also, how much is it going to cost to acquire that person? Well, I guess if it's a salesperson, they might be 1099. That's a bit different. But let's just say, it's your CFO. Like, you have a really good CFO, they're very vital to your operations there. Like, how much money and time would it take to, obtain another elite or top level CFO? So that's really important to be aware of. And then, banks may freeze lines of credit. I just kind of threw that in there. It's not really, as big of a concern, but that is something that could possibly happen. Again, it goes into the relationships. If those relationships or those ties with said bank or bank accounts is with a key person, that might affect that there. Next, and I kind of touched on it already, but who is a key person? So key person in the business, not just the owner, it's really anyone that your business could not afford to lose. And some examples are founders, co-founders, top sales producers, specialized technical talent, maybe like a top engineer. And then executives in general, but those also with lender investor relationships. Those are all examples of key people. So just really ask yourself, like, who in your business is absolutely vital to the operations, and if they were to unexpectedly pass away, like, what would be the impact of that on your business? So anyone who really falls into that criteria would be deemed a key person. So if you're a smaller operation, everyone there might be a key person. If it's you, the owner operator, and you have a few main people that work for you, you guys would all be considered key people in that scenario. Bigger companies, not really the case. But yeah, a lot of smaller operations, everyone could essentially be deemed as a key man or a key person. So what is key man life insurance then? So essentially, it's the way I like to look at it. It's a safety net that keeps your business going. So if you have a key man life insurance policy on, let's just say yourself, you're an owner operator, and you unexpectedly pass away, your company is going to, number one, they're going to own the life insurance policy on your life. So that way, when you do, if you do unexpectedly pass away, then the company is going to receive an income tax-free death benefit. So essentially a lump sum of money that can be used as cushion and really just buy your company time to figure out what's going to be that next move. So if it's, hiring someone to fill in the shoes, that's obviously probably the biggest thing. And then the other thing is just keeping the lights on. So maybe, if you're owner operator and you're bringing in a lot of the revenue, or again, the top sales producer example, then that cushion of money can really help for that lost revenue for a period of time to keep the company afloat. So that's really Keyman Life Insurance, the way I like to look at it, and it can be used, and I'll get into it in other slides. There's different products that can fit that, but that's essentially what it is. And I'll go through these bullet points. So it's a life insurance policy that's owned by the business, and it covers the life of a key person. So that's who's insured. If that key person dies, then the business receives an income tax-free death benefit, which we talked about. And then that benefit can be used for covering lost revenue, recruiting a replacement, or paying down debt or buying time for the company. And there's other scenario or other uses of that money as well, but those are the common uses of that money. So that's what Keyman Life Insurance is. And some real world examples here I want to go through, and I've already gone through a couple, is let's say when a key person coverage, so when key person coverage can save the company. So we'll go through a couple. So you got a sales director that generates 65% of revenue. Like that is a person that is extremely vital to the operation of the company. That is someone you'd want to have a Keyman policy in place on. Because if they pass away, if 65% of your revenue is gone overnight, essentially, because that's what they're bringing in, that's a drastic impact on your company. So you got a CTO who holds all proprietary system knowledge. That's someone in the company that's often overlooked, but that is very important. If they have all this information and they didn't do a good job of documenting that and such, who knows how long it's going to take to uncover and find that information. So you're going to need to buy yourself or buy your company time as you're going through all of that. Third point here is an owner who has active loans under a personal guarantee. That's a crucial scenario where having Keyman insurance in place would really help that business just figure out what to do next. And then the last example I have of a key person here is a COO who manages all vendor relationships. Really important. That's a really important role there, and that's where Keyman can really help out. So those are just some examples of Keyman insurance and where it can fit, or the types of people that it would fit. Next part, we're going to go through the additional uses of Keyman insurance. So kind of what we talked about already, it's more than just a death benefit. And this ties back to the different types of insurances I briefly grazed over that you can use for Keyman. So there's really two types of insurance that you can use, two types of life insurance. There's term insurance, term life, and then there's permanent or cash value life insurance. So when it comes to these additional benefits, we're specifically going to be talking about cash value, more specifically whole life insurance, to be able to do this. So beyond the death benefit, it can be a bridge capital for transition, meaning that you've got that money, you got money in your policy and your cash value, and or that death benefit that can be used to bridge or to buy your company time. Also, beyond the key person passing away, if it's a cash value plan, you're going to build up cash in that policy, and the company, since it owns it, can use that cash value if needed for other business operations, whether it's buying a piece of equipment, expanding the company, paying for marketing, whatever it might be. The business can tap into that cash value as well. Emergency liquidity during a crisis. So again, with that cash value, if something happened within the business, if there's cash flow disruption, whatever it might be, and the business needs cash, that cash value, the policy, that's a bucket of money that the company can decide to tap into and use to help get the business back on track. So that's really important to be aware of. And the third thing is it's a tax advantage guaranteed asset. So with whole life insurance, you get guaranteed growth on the cash value. And if you're with a mutual insurance carrier, especially one of the top ones out there, there's a handful, or more than a handful, but the top carriers have been around for 100 plus years. They pay dividends on top of the guaranteed interest. So you're going to get guaranteed interest and dividends on your cash value, and that's going to grow tax deferred. So that's what I meant there by tax advantage. And side note there, you can access that money tax free by taking a policy loan, or if you were to withdraw up to your cost basis, the premiums you put in, then obviously there's not going to be any tax on that. And I'm not recommending that. I just wanted to point out that's another way to technically get tax-free money is you withdraw what you put in. So next point here, you could convert the cash value into an executive bonus or retirement later. So this is a whole nother presentation and concept in itself, but there's another thing called an executive bonus plan, and it's essentially where the overall or the overarching concept of it is you're using the cash value of a life insurance policy to fund a future pension-like or bonus for an employee. So for example, you might say, hey John, if you're working for my company, if you stay here for the next 15 years, we're gonna pay you a $50,000 a year bonus for the rest of your retirement. And that $50,000 bonus is gonna be funded by the cash value of a life insurance policy. So John would be receiving that money throughout his retirement, and then when he passes away, depending how it's structured, the company could have themselves as the beneficiary. So the death benefit would be paid back to the company. So that's gonna recover all the premiums paid for that policy, and also the payout to John. In this case, the company is going to recover all of that money. So side note there, separate presentation is going to come out about that in the future. And then the last thing here I have is you can collateralize the policy for loans to buy equipment. So that's just utilizing the cash value in your policy to fund equipment and other needs for your business. And then next up here, how to structure it right. So there's many different types of way to structure these. It's all going to be dependent, for what your goals are as a business owner. And I put here, not all key person policies are created equal. So there's no one size fits all solution there for that. What I have is you could use permanent life insurance like I talked about previously for long-term value, not just term insurance. Consider convertible term if budget is limited. So if your budget's limited and doing a permanent plan doesn't make sense, term is great, but more specifically convertible term, because what that's going to do is it's going to give you the ability to convert that to a permanent plan down the road. So you're not locked into having to convert that, it just gives you the option. So instead of just getting a regular term policy, it's a little bit more for a convertible term, but you have that flexibility or that option, should you choose to exercise it down the road to convert that to a permanent plan. And just to go over that a little bit more, like if you had a 20-year term policy, every carrier is different, but you could essentially, let's say you're 5 years into that term, if the company allows for that, you could convert that over to a permanent plan, or even a portion of that over to a permanent plan. So that's just something to be aware of. Convertible term, you want to align your coverage amount with revenue or replacement cost. So again, this is where it's going to look different for everyone. Some people are more geared towards doing a multiple of what the employee or the key person brings into their company. Like that's how much coverage they would want to get. So if the employee, you as a business owner know, okay, they bring in, $200,000 a year to the company, you might want 10x that amount for key person coverage. So that'd be $2 million of coverage would be needed for that individual. Because if they were to pass, it's like, okay, the company's going to receive $2 million, which is essentially, 10 years worth of what they bring into the company. So there's different ways to structure that there on how you want to ultimately get to that coverage amount. And then the last thing I have here is the ownership and beneficiary is always the business, like I talked about. So the business is going to own the policy. The insured is going to be the key man employee or the key person employee. And then the beneficiary is going to be the company. So when that key person passes, or if that key person passes while they're employed with you, then the company is going to receive that income tax-free death benefit. So that's a bit about the structure of it there. And then really final thoughts on key person insurance is, and I have in quotes here, you can insure, your trucks, your tools, and your tenants, but not your and I have a question here, but not your most valuable asset. And as business owners are insuring things, oftentimes, more times than not, it's not registering in your mind like, hey, the most valuable asset to this business is the people. So why wouldn't we have insurance on the people, that run the business and make things happen? Like, all those other things are important, but the people that run the business, especially those who are very vital to the operation, like, it's really important to make sure there's something in place that, God forbid, something happens to them unexpectedly. You don't want that to affect the overall performance of the business. You want to make sure that there's something in place to help the company stay afloat and essentially weather that storm if someone were to pass away. That's very vital to your business. So that's something, that's what that means there. And after going through this, now you have an idea of what you could potentially do. And then, it's all about protecting the people your business can't survive without, like we talked about throughout this presentation. So that's really the last, thought I wanted to add in there on this topic. And then really next step, if you want to, book a discovery call, learn more about Key Man Insurance, how it may help your business out, and maybe just identify some key risk areas in your business that you haven't unpacked yet already. And then on that call, if it makes sense, we can go through some different policy designs and structures to see what would be best fit for you and your company and those key individuals. So that's all I have for this video today. If you found it helpful, please like, share, comment on the video. If you have any questions, you can leave those in the comments, or you can shoot me an email at the Hidden Reserves. It should be gmail.com. It's the Hidden Reserves at gmail.com. Shoot me an email. Other than that, we'll catch you in the next video. Thank you.